Good morning, everyone. My name is Anae Agostini, CEO of CID Insurance Programs. Welcome to our Employment Practices Liability, a product webinar. I'm really happy to introduce our instructor for today, very knowledgeable in the EPL product, Corey Comstock. She's a underwriter for United States Liability Insurance Company. And we also have Dan Mulligan, our professional lines underwriter. And I want to also introduce Jacob Cole, who is our marketing specialist, who's in the background making this all happen. So let's get started. Next slide, Corey.
Yep, sorry. Okay, there we go.
There we go. So we always want to start out by having an objective. Even us as a team, while we're on the phone, we'll come up with an objective that of what we want to accomplish with our webinar that we're going to be teaching. So the same thing for you. Let's talk about what our objective with you is to how you can best communicate the importance of EPLI to your clients. And usually that becomes the challenge of them understanding that exposure isn't insured someplace else and that they need a standalone EPL policy. So, and then that's going to be our main objective, and Corey's going to do a great job with that. Feel free to ask questions as we go along. So as participants, you're going to be defaulted to mute because there's too many of us we all be talking at once. And but you can hear. You just won't be able to speak. So please feel free to pose questions in the chat room over to the right at any time throughout the webinar, and we'll answer them. My job will be to make sure that Corey answers your questions as we go along, and you don't have to wait to the end. As you think of them, just chat them in. All right, I'm going to turn it over to Corey to get started.
Okay, great. Thanks, Anae. So thank you again, everyone, for joining us today. Here's our agenda for the presentation. We're going to discuss what EPLI is, and then a little bit about the history of the coverage. We'll get into what's covered under an EPLI policy. We're going to talk about the opportunity there is in the market, and then the ease and speed of quoting with CID and USLI. So what is EPL? Employment Practices Liability is a relatively new form of liability insurance. The first policy hit the market in the early to mid 1990s. It provides protection for an employer against claims made against employees, former employees, or even potential employees. So it's going to cover discrimination, wrongful termination of employment, sexual harassment, and other employment-related allegations. And that's, wage and hour violations or violations under the Family Medical Leave Act. These allegations of discrimination, harassment, and wrongful termination have increased dramatically over the years. And the cost of defending these lawsuits can have dire financial consequences on businesses. So with EPL, especially with the small businesses, it tends to be more of a frequency issue rather than a severity issue. That doesn't mean that these claims aren't expensive, because they certainly are, but we tend to see a lot of the smaller claims. And then, the cost of defending even just a frivolous claim is still very expensive. Depending on where the insured is located, we're spending about $15,000 to $25,000 in defense costs alone just to get a frivolous claim dismissed. And so where do EPL claims come from? There's the federal laws such as FLSA and FMLA, Title VII of the Civil Rights Act of 1964, and that's what has created protected classes. So it prohibits discrimination because of race, color, religion, sex, national origin, pregnancy in hiring, firing, compensation, and in any term or condition of employment. So from 1964 until it was amended in 1991, those claims were always brought before a judge. So historically, judges were more conservative in the awards that they granted, and this kept the severity of these claims, a lot lower, and they could be more predictable. So then in 1991, when the law was amended, it was broadened, and plaintiffs were now allowed to actually bring the complaint in front of a jury of its peers. And this is what, it's led these claims to becoming more unpredictable. And this brought on the first EPLI policy. So insurance companies saw a need for the coverage of these types of claims to protect businesses. And I guess, again, the small businesses. So then there's also state laws, and these are typically going to be broader versions of federal law. So for example, the federal minimum wage is lower than in some states. And this makes the burden on the employer that much greater because they need to keep up with all of the laws that are constantly changing. And if they have locations in multiple states, they need to be familiar with each state's specific laws. So EPL claims can even be brought by customers or vendors of the insured. So your basic EPLI policy protects against wrongful acts committed by one employee against another employee. But what happens when, in the case of, say, a retail store, where the majority of the business is happening in front of those that are not employees or a third party, such as customers? What happens if, there's a sexual harassment claim made in that context? And this is where third-party coverage would be triggered. So third-party EPL coverage addresses claims made by non-employees against the insured that arise from acts committed by employees. So they generally allege some form of discrimination or harassment. In the example of a retail store, as long as the wrongful act is committed by an employee and the insured purchased third-party coverage, then there is potential coverage under the policy. So say harassment from a salesperson against a customer, it wouldn't cover, one customer harassing another customer. We had one claim where the insured was a consulting firm, and the owner hired his 80-year-old mother-in-law to come in and sit at the reception area and just greet people as they entered the office, while she developed this friendly, or so she thought, relationship with their UPS delivery man. All of a sudden, he stopped coming around and later filed a hostile work environment and harassment complaint against the insured because of what we ended up finding out was that she started singing "Who Wears Short Shorts" to him, thinking that it was funny, and he did not feel that it was. So we ended up spending, I think that one was about $40,000 just to settle that claim, which, sounds kind of like a ridiculous scenario. So why is EPL so important? The Insurance Journal put out a study a few years ago that an employer is actually more likely to have an EPL claim versus a general liability or a property loss. And general liability policies do not cover EPL, or if they do, they're going to be added on by an endorsement, and they tend to be very low limits, typically 10, 15, 25,000, and it's really watered down coverage. Typically, it's going to be maybe defense only. It's going to only be for discrimination or harassment, and a lot of times, again, like I said, it's defense only. There's no indemnity. It's typically not going to include that third-party coverage either. So again, why is EPL so important? The cost to the employers, these can be very costly claims. You can see the stat on the slide that, the average time it takes to process an EEOC investigation is 229 days. So these claims tend to have a very long tail, which means it's lots and lots of billable hours by the attorneys. The average cost alone for defending an EEOC charge is around $15,000, and 16% of claims that are seen in court have over a $1 million settlement. And actually, I just saw a recent statistic that just about over 25% of those seen in court are over $500,000. The average cost to defend an EPLI claim can be around $150,000. And as I mentioned earlier, we're spending anywhere between just 15 to 25,000 to defend a frivolous claim, but it really is usually more like 150 to 200,000 when the claims have merit and there's a legitimate claim behind it. They tend to drag on for a while. So some claim trends, over 40% of EPLI claims are brought against private employers with under 100 employees. So these types of companies do not have that amount of money to be spending, and they don't have the time, to be, defending themselves. And a lot of the times it does put them out of business. 67% of discrimination cases settled by jury verdicts are in favor of the plaintiff. And the median jury award is about $250,000, plus possible punitive damages being assessed. And then some other trends that we're seeing, we're seeing a lot of the website disability claims. So those are, the hearing or visually impaired not having access to the same benefits on an insured's website. We see, a lot of the transgender claims. And wage and hour claims have been on the rise as well. So here are a few of the top coverage features to look for in a policy. So the ones on the slide are specific to USLI's EPLI product. Other carriers' forms, they may vary in what they offer. So one of the most important coverages is our FLSA coverage. We have a $100,000 sublimit for both defense and indemnity of wage and hour claims. So we offer this coverage in all states except for California and Florida. It's included for no additional premium. And our coverage is unique because most other carriers are offering defense costs only. So offering the indemnity is really broadening coverage. There's not typically a whole lot of defense with these claims. The Department of Labor, they're going to be the ones that come in and say, you owe $60,000 in back wages. Well, that's what you're going to owe. Our average cost to defend these claims is around $10,000 to $15,000, and then the indemnity side has been where the real costs are, and that's averaging between like $40,000 and $60,000 in loss. Defense costs outside the limit of liability and uncapped. This is very important since we spoke about how the defense costs, they can really accumulate over time. So you don't want these legal fees eroding the limit to pay out on any indemnity if the insured is found liable. We have a duty to defend, and we will assign panel counsel that specializes in employment practices liability. We have a 75-25 hammer clause that's in favor of the insured. Full prior acts where available, and it's available in most states for most classes, even for a first-time buyer. And then punitive damages were insurable, so there's a handful of states that don't allow us to indemnify the insured, as these are intended to, punish the insured. California is one state where they are not insurable, but we do offer most favorable venue wording, which means that if the insured is based in California but has a location in another state, and that's where the claim is being brought, then it is allowable in that state, then we will provide coverage for it. Here are the underwriting considerations when quoting EPL for an applicant. So when you send us a submission, what are we looking at in order to determine how to price the account and what coverages to provide? So first and foremost, we're looking at the type of business. Generally, the higher the salaries at a business, the more severe the claim is going to be. So if you take that retail store from our previous example versus, say, a law firm, they're going to be rated differently because a law firm's exposure tends to be, higher. We'll look at the location because, as I mentioned earlier, some states have broader employee protection. So no two states' jurisdictions are the same. The retail store in Iowa is not going to be rated the same as one in California. We'll look at management experience. Do they want subsidiaries covered? We rate on the number of employees, and it's broken out by full-time, part-time, seasonal, temporary, and we do include coverage for independent contractors. And then salary levels, which I explained. We'll look at the financial condition of the account, management practice, and do they have the proper policies put in place? And then the last bullet point, claims activities. Obviously, we understand that these claims happen. As I said, it tends to be a frequency issue, and a lot of them are frivolous. So what we're looking at here is, the severity of the claim, what actually happened, and most importantly, what are they doing to prevent it from happening again? So what remedial measures have they put in place? So what are you currently doing to sell EPL? Because it is different from selling general liability and property. Clients don't always see their exposure, and it's not going to be required by contracts or loans. So are you currently including an EPL quote for every risk when providing other lines of coverage? Are you having success? What percentage of customers are actually purchasing it? In the U.S., only 1 out of 5 employers actually carry this insurance. So there's a huge portion of the market that's not purchasing. And, we've already established that they very well should be. And are you offering EPL or are you really selling it? So is it, hey, here's this coverage that's available, or are you explaining to the insured what their exposures are and, like I said, truly selling it? So here's the typical sales model. The producer offers EPLI as a part of the quote, but it's not really sold. So it's included in the conversation, but there's not a whole lot of time spent on it. So then the insured makes a quick decision, a perceived lack of exposure. We're a family-run business. Our employees all get along, we're like family, but we've certainly paid out on claims where employees have worked together for over 20 years and they always got along. They mistakenly assume that they have adequate coverage on their BOP, which I mentioned is it's going to be really watered down coverage, or the insured doesn't understand what it covers, and that's where claims examples are really helpful in selling this line of coverage. More often than not, it's the cost factor. So our average policy premium is about $2,800 nationwide, and we've already established that the defense of a frivolous claim alone is between $15,000 to $25,000. So it does provide peace of mind to the insured because it only takes one upset employee. And again, we've established that they're more likely to have an EPLI claim over a GL or a property loss. So more often than not, basically based on the items that I just mentioned, the insured declines to purchase EPL, and then the interest only arises after they've had their first claim, which at that point it makes it a lot harder to place. It's going to be more expensive, so it's really important that you're selling the coverage before that first claim comes in. So common questions small employers tend to have, is EPLI insurance alone enough? So how would a small employer get answers to their employment-related questions, such as hiring a new employee that might have a disability, or they aren't sure how to classify an employee. Are they exempt or are they non-exempt? Or somebody requests to take FMLA to take care of their husband that's sick. Most employers, the smaller employers, that we see, they don't have an HR department or a lawyer on staff to answer any of these questions. And then keep in mind that the state and federal employment laws are constantly changing. So it really is difficult for these businesses to keep up with, and it really just makes it easy for them to make a mistake. So they have two options at this point. They can call a lawyer, which doesn't usually happen since the cost can be anywhere between, $200 to $400 an hour. So unfortunately, that doesn't happen. And then, they guess, and then unfortunately, they get it wrong. And that's what will lead to these EPL type claims. So an alternative approach, selling more than just insurance. We want to educate the insured, explain what their EPL exposures are. We don't, as the carrier, we don't want to just be issuing thousands and thousands of policies each year, and just crossing our fingers and hoping that none of the insureds have a claim. We want to provide them with risk management tools and an avenue to get answers to those HR questions and, hopefully prevent a claim before it ever happens. So there's many different vendors that carriers use. We use one called People Systems, and it is completely free, unlimited, and completely confidential. It's an HR hotline where our insureds can call and get qualified advice from an HR consultant. So as I said, the idea is really just to give them an avenue to help prevent against claims or mitigate a potential situation. And then they have a very broad EPLI policy in place in case there is a lawsuit. So that is our presentation. Thank you so much for joining us. I hope this was very educational for you. So I'm going to pass it over to Dan, and he's going to explain how easy it is to get an EPLI quote.
Thanks, Corey. Usually, on most classes, the easiest way to get an EPLI quote is just to call me direct and give me the name of the company, how many employees they have, broken down full-time, part-time, what they are also doing. Some classes like restaurants and things of that nature, I'll need a application, but I'll be able to tell you that from our conversation, or you can just send me an email with some general information on it, and I can get a quote to you. Usually I can get them out to you within 24 hours.
What were those key pieces of information that you would need, Dan?
I would need the name and address of the company, what exactly they're doing, and their employee count broken down by full-time and part-time employees, and then also confirmation that they don't have any claims. If they do have any claims and I cannot use the phone quote system, then at that time I'll need to send you some applications with claim supplementals and things of that nature.
Perfect. Got it. Well, thanks. And also, applications, lots of marketing tools are available on our website as well at CIDinsurance.com. I don't know if we have a page beyond this that gives that, and we will be sending out the application. We have a great marketing a flyer that you as brokers can use to actually put your information on it and send it out with as a marketing piece to your existing package clients, your insureds, and to cross-sell EPL, because that's one of the most important ways that you can actually, it retains your business, your existing business, and it's the warmest sell that you can have is extending and adding more policies to an existing insured. So please check out our website to find out all the tools that we have available there. This webinar will also, a link to it will be sent to you as well so that you can watch it again. If you go to our website, you can find our webinars and you can sign up for upcoming, those remaining for the year. We will have our 2019 on the calendar very soon as well. And anyone in your office can watch this webinar again. So thank you for joining us. Everybody have a great day.
Thank you.